Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 4th of April 2021, and we're publishing the 16th episode in our Bitcoin versus Gold and Silver series. In today's episode, we look at an article published by Forbes.com, quoting JPMorgan's view that as monies and investments come out of the gold space, it could very well move into the Bitcoin space, causing the latter's value to more than double, even compared with current prices, which are already very near their peak. So let's take a look. Now, before we look at Bitcoin's momentum and the possibility of it likely to double in price, just a quick summary of our previous 15 episodes. In episode 1, we explained why we launched this series and why people found Bitcoin attractive. In 2, we confirmed the size of the equity and gold and silver markets and compared them with Bitcoin's capitalization value. In 3, we highlighted a non-exhaustive list of the disadvantages of Bitcoin, similar to other cryptocurrencies. In 4, we highlighted the Skybridge Capital's Anthony Scaramucci had launched a brand new Bitcoin fund and the reason for doing so. 5, we looked at the intrinsic value of gold and silver compared with the intrinsic value of Bitcoin. 6, we looked at a number of YouTube and Google influencers who've used Bitcoin's rise as both clickbait and an investment opportunity. 7, we looked at $11,000 fall in Bitcoin's price and argued why it will recover quickly. In 8, we looked at how the shortage of microchips affected the ability to mine more Bitcoin. In 9, we looked at the likelihood of the Reddit Robinhood short squeeze agents targeting Bitcoin and whether they could be successful. The answer was no. In 10, we highlighted that Ray Dalio's Bridgewater Associates had also invested in Bitcoin, and some analysts were predicting a price in the short term of up to $85,000 a coin. In 11, we talked about Morgan Stanley, Deutsche Bank, ARK Investment Management, and BNY Mellon were all investing in Bitcoin or related services. In 12, we looked at the potential future direction for Bitcoin, gold, and silver. 13, we highlighted that virtually all asset classes were falling and which were likely to improve in the forthcoming months. In 14, we compared gold and silver's weakness compared with Bitcoin's robustness and concluded that Bitcoin still has further to rise, while gold and silver may at best just consolidate, at least for now. And in 15, we looked at $60,000 Bitcoin and asked when will the bubble burst and why are both gold and silver languishing while Bitcoin is forging ahead. And we've placed links to all of these videos below. Well, at the time of writing, i.e. today, 4th of April, 1405 GMT, Bitcoin's price is standing at $57,931, just $3,625 or so off its all-time high of $61,556. or the equivalent of just under 6%. That's 6% lower than its all-time high. Market capitalization is currently $1.06 trillion. Far, far removed higher than it was when we started this series. Now, we reported in our Gold and Silver Weekly Update for the weekend in the 2nd of April, which we published yesterday, and we've provided a link to that below as well, that gold is currently trading at $1,730, some $330 off its all-time high, or if you like, 16% lower. And silver is trading at $24.99, or nearly $24 off its all-time high, or 20% lower. Undoubtedly, Bitcoin has shown itself, so far at least, to have been the better investment or speculation, depending which view you take, bearing in mind particularly that even just 1 year ago, its price was just $6,740. In other words, it's $51,000 plus more in just a year. Now, we've already covered the fact that, of course, Bitcoin has arguably no intrinsic value in a previous video, compared with precious metals that do. But nevertheless, it has captured the imagination. Initially, we suspect of the young, and now even the more seasoned investor, speculator, and various hedge and investment funds now find this asset class much more attractive, and serious investment monies have moved into it. Now, on Friday, just past, an article was published by Forbes.com stating the following, and we'll quote them literally. Bitcoin has won its fair share of Wall Street supporters this year amid a bull run that's seen it soar around 500%. The Bitcoin price hit highs of just over $60,000 per Bitcoin last month before falling back slightly, but has since made up lost ground. Meanwhile, the broader cryptocurrency market has surged to almost $2 trillion, boosted by decentralized finance tokens. And now analysts at Wall Street banking giant and former Bitcoin skeptic JPMorgan have said Bitcoin could climb as high as $130,000 in the long term if it continues to see its volatility converge with that of gold's. Considering how big the financial investment into gold is, any such crowding out of gold as an alternative currency implies big upside for Bitcoin over the long term. JPMorgan analysts led by Nikolaos Panigurtsoglou wrote in a note to clients this week. The bank found that a 6-month measure of Bitcoin volatility appeared to be stabilizing around the 73% mark, suggesting tentative signs of Bitcoin's volatility normalization that could help to reinvigorate interest from institutional investors. High volatility acts as a headwind towards further institutional adoption, according to JPMorgan. The Bitcoin price has soared as institutional investors, including London-based asset manager Rufa and insurance giant MassMutual, have bought into Bitcoin, with Elon Musk's Tesla topping off a series of high-profile Bitcoin bets. The Bitcoin price has climbed from around $10,000 per Bitcoin to around $60,000 as a result, but JPMorgan thinks it could still have some way to run. Mechanically, the Bitcoin price would have to rise to $130,000 to match the total private sector investment in gold, JPMorgan analysts wrote. The Bitcoin community is, meanwhile, feeling flush after Bitcoin's sensational 2021 run. After a stellar performance in the first quarter that saw the king of crypto record an all-time high of $61,700, Bitcoin enters April leading a seemingly buoyant cryptocurrency market. Paolo Arduino, the Chief Technology Officer at British Virgin Islands-based Bitcoin and cryptocurrency exchange Bitfinex, said in emailed comments, pointing to PayPal's announcement this week it will soon let users spend Bitcoin and a handful of other cryptocurrencies at its 29 million merchants worldwide. As PayPal's recent announcement demonstrates, the inherent volatility of digital tokens is no barrier to their increasing use in payments. This rally could possibly herald Bitcoin's first meaningful encroachments into the legacy financial system and credit card industry. End of quote. So as we can see, Bitcoin is gaining increasing credibility and is being accepted much further afield and by more institutions and money transfer agents than ever before. And of course, you have a system here, whereas any money coming out of precious metals, usually invested in because of its alleged inflation hedge or currency devaluation protection, may indeed be directed towards Bitcoin, but assuming even assuming that those monies remain constant. Any new monies could find their way into the cryptocurrency Bitcoin space at the expense of gold and silver. And this was something we predicted right from the very start of this series, and were much maligned for doing so. We genuinely believe, not because it's right, but because it is, that Bitcoin is a potential serious alternative to gold and silver. And whilst we ourselves are not investing in it and feel it's too late even if we wanted to, nevertheless, others will, have, and arguably will benefit, perhaps short-term, far greater than a traditional precious metal investment would allow. Long-term, however, we're sticking by gold and silver. What are your thoughts? Please share them. Thank you so much for listening. And if you haven't done so, please subscribe to our channel. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.